Hello and welcome to San Diego Market Watch for August 2nd, 2022. I am your host, Eric Edelman, and we are here every week talking about the San Diego real estate market and breaking down the numbers for you. If you like this content, please like, share, subscribe, and comment because that really helps us out. So let's jump right into it. When we are looking at the numbers for this week, we see that the number of listings in the marketplace has been relatively similar now for 4 weeks. We had a real run up of inventory. Well, going all the way back to early May, it went up. It stayed the same for a week or so. Then it has been steadily climbing until until about right here. Yeah, it kept going up and it's still going up a little bit, but we have been in the 4,700s. In other words, the number of homes available to view and purchase in San Diego County has been between 47 and 4,800 for the last several weeks here, for the last 4 weeks. And that really is interesting to me because we have been hearing so much in the media about rising home inventory. And it's true, it did rise. However, we rose from what I considered to be a crisis level low. There just wasn't inventory. And the number of pending homes was outpacing the number of for sale homes and causing prices to really spike. So, we had the interest rate hikes here in the early part of June, the initial, really big bump in interest rates that scared everybody out of the market for a few weeks. And then inventory started to shoot up. And of course, that was causing the media to go nuts and tell us that the real estate market was going to implode on itself. Anyway, we did see a rise and now we see a leveling. And here we are in the middle of summer. This would be the prime time to list your home if you were going to, and it is pretty stable. So that's what's going on with standing inventory. Now let's take a look at new listings. New listings have been going down since the end of June. We had a little uptick here in mid-July, but that was just one week, a week over week increase, and then right back down again. So the number of new listings now is about as low as it's been any week since early June. So we're seeing that the number of new listings is not increasing. The number of new listings every week is decreasing, while the number of pending sales is remaining relatively stable. And then, of course, looking down here at closed sales, those have been relatively stable for the last 4 weeks here. And, again, going back to June 8th was the week that we had the lowest number of closed sales in a week, and they ballooned up a little bit. But again, all of these numbers are tracking relatively well, in my opinion. New listings being the most interesting one to me. If there was going to be panic selling based on sellers freaking out that they needed to cash out before the market crashed, you wouldn't see the number of new listings going down. You'd see the number of new listings going up, and you'd see, of course, with the number of pendings staying the same, you'd see the number of homes for sale also going up. So that's what's going on with inventory. What's going on really to me represents a fairly stable real estate market heading into the fall. So then let's take a look at what is going to be sort of driving the next few weeks of pending sales, and whether or not prices are going to soften any more than they already have. And that is the mortgage rates. I was going to say prime rate. That has gone up. However, with the most recent Fed action raising the prime rate 3/4 of a point, actually gave confidence to the mortgage industry in terms of the Fed having, or it gave confidence to the bond market because investors feel like the Fed is taking inflation seriously. So now the average mortgage rate around the country has gone down. And this week, for the first time in many weeks, we are under 5%. We're at 4.99 on average, and that is a good thing. That gives buyers more buying power, and so we should see an uptick in those pending sale numbers. Now, if you want to do a 5-1 ARM, you can get an even lower rate, and that is, in my view, a pretty good bet right now, because with the 5-1 ARM, you're locking in a low introductory rate for 5 years, and you're betting that this number is going to come down in the next year or two. And as we get a handle on inflation, these rates will come down. And by next year, we expect rates to be back into the comfortable high threes, low fours is what a lot of industry experts are talking about. So that's what's happening with mortgage rates. Now, of course, median price has not changed since the last time that we met, because this is a month-over-month number. So we really don't have another month worth of median price data, but we will next week. So tune in next week, next Thursday, for the next installment of San Diego Market Watch, where we'll have the July data from San Diego Association of Realtors to talk about. And we will definitely talk about that and anything else that comes up. So for now, I am going to sign off and say, see you next week on San Diego Market Watch.